When I woke up this morning, Ethereum was up so much I had to double check the chart. But here's the crazy part, this might only be the start of the real move. Because right now, a perfect storm is forming. And almost no one is ready for how big it could get. What's fueling this record-breaking wave of money into Ethereum, and why could it push us past the ATH faster than most people expect? Let's start with the numbers, because they're insane. Spot Ethereum ETFs are not just doing well. They're shattering expectations. Over $1 billion in net inflows in a single day, that's more than some entire altcoin markets are worth. And in July alone, these ETFs brought in $5.43 billion, which is a 369% jump compared to June. Since launch, they've pulled in over $8.7 billion, with total assets under management now around $16.6 billion. And here's what makes that really powerful, these aren't speculative day traders. This is deep-pocket Wall Street money, pension funds, and wealth managers moving into ETH for the long haul. When institutions decide to park billions into an asset, it's because they've already done the homework. And they see serious upside. But why are they so confident now, when just a few years ago, ETH was considered too risky? Two reasons. First, ETH has matured, the move to proof of stake, lower energy use, and stable on-chain activity have made it easier to sell to compliance departments. Second, the regulatory landscape is finally starting to favor crypto in a big way. But big money inflows are just one piece. Because the way whales are positioning themselves tells an even bigger story, and it's happening quietly, behind the scenes. Why are crypto's biggest players hoarding ETH like there's no tomorrow, and what happens when the rest of the market catches on? Since July, whales and institutions have quietly scooped up over 856,000 ETH, worth more than $3.16 billion, through over-the-counter deals that don't even hit the public order books. That's the stealth game, they buy where no one can see, then leave the market short on supply. And here's the critical detail, the amount of Ethereum sitting on exchanges has dropped to the lowest level in history. That's not just a bullish sign, that's a setup for a supply shock. When you have less ETH available for sale and more buyers entering, the price doesn't just go up, it can gap up violently. But what's their end game, and why does it matter that they're buying now, not later? Think of it this way, whales don't chase tops. They accumulate when they believe the next move will be so strong that they can hold for months or years and still crush returns. That kind of conviction only comes when they know something most retail traders don't. And here's the twist, it's not just whales creating pressure. There's a wave of new capital that's about to flood into the market from a completely different source. One that could make 2021 look small. Could a single policy change unleash trillions of dollars into Bitcoin and Ethereum, and why is this happening now? Three big developments are hitting at the same time. 401k crypto access, retirement accounts, managing trillions in capital, can now legally invest in Bitcoin and Ethereum. Imagine just 1% of that money flowing in, we're talking hundreds of billions. Regulatory clarity, the SEC's Project Crypto plus the Genius Act and Clarity Act are laying out a rulebook institutions can finally work with. Less uncertainty means bigger players are ready to commit. Stablecoins, mostly built on Ethereum, just hit an all-time high in circulation. That's not speculation, that's real-world utility and demand baked into ETH's network. So, what happens when all this new money actually starts hitting the market? This isn't overnight hype, these are structural changes that will keep fueling demand month after month. And the timing couldn't be better, ETH is already moving, and once these flows start, momentum could snowball into something massive. And all of this is happening while Ethereum's price is sitting right on the edge of history. And if it breaks through, the past tells us exactly what could happen next. What if ETH isn't just breaking out, but about to go on a run so big, $10,000 could actually be a conservative target? Ethereum is now less than 9% away from its all-time high of around $4,800. The last time ETH broke its ATH in 2021, it didn't stop, it ran over 250% higher in the months that followed. If we repeated even part of that move today, we'd be looking at prices between $10,000 and $12,000 per ETH. And remember, 2021's rally was fueled by NFT mania and a lukewarm DeFi summer. This time, the drivers are far stronger: institutional money, regulatory clarity, real-world utility, and a record-low circulating supply. But is there anything that could actually speed this move up even more? Yes, the ETF approval pipeline for other assets. If the SEC starts green lighting more crypto ETFs, liquidity and investor attention will spike across the board, and ETH is perfectly positioned to ride that wave. So let's connect the dots, because when you see the full picture, it's hard not to get excited. Here's what we know. Record-breaking ETF inflows. Whales locking up supply. Regulatory changes unlocking trillion-dollar markets. And a technical chart that's screaming bullish. The last time we saw this kind of alignment, Ethereum didn't just break its ATH, it went on one of the most powerful runs in crypto history. This time, the setup is even better. If ETH does break its all-time high in the next weeks or months, the upside potential could be unlike anything we've seen since Bitcoin's 2020 to 2021 rally. If you want to catch this move as it happens, from the exact moment ETH breaks out to the hidden indicators that signal the next leg up, hit subscribe right now. Because in crypto, the biggest profits go to the ones who are ready before the move starts.